Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
Hey, good morning. Good morning to our listeners for Navigating Retirement. Welcome to 2021 and some great topics that we have for this year coming up. Today, we want to talk about the 10 steps to prepare for retirement. And I want to mention up front that we do have an offer today for you to receive this list of the 10 steps to prepare for retirement. You'll see some pop-ups come up on your screen to be able to get that. And of course, you can always call us at 735-5065. That's 843-735-5065. Let's get into it. We got 10. We got to cover them fast here and then get you this list for your retirement planning. First of all, we need to make sure that we define our budget. And when we define our budget, we need to do this from two directions. First of all, we need to look at what we think or anticipate our spending in different expense categories are going to be. And then we want to measure those against our actual spending that we've had maybe over the last year or so. Now, a resource that you may use to help you plan on your expenses and keep track of expenses would be Quicken or Mint or something like that. That information would be very readily available for you to define your budget. The second step for preparing for retirement is to learn to define your sources of guaranteed income. Now, when we do our income planning in retirement, we have a three-legged stool that we want to look at, and define sources of income are one of those three legs. One of those three legs could be your Social Security. One of those three legs could be your pension if you have a defined benefit pension. We need to identify these sources of retirement income. Then we need to have some solid estimates of what that income will be in retirement. And then we need to make sure that we maximize those benefits, if it's Social Security or pensions, to take advantage of the options that are given to us, the rules, the limitations on taking those benefits in different ways. What kind of survivor benefits do you want on those Social Security benefits or pensions? And then also taxation and penalties become very important. So make sure you begin your decision-making process early with your guaranteed sources of income. Make sure you take into account all of what those may be. And perhaps maybe you might find that you might rely a little bit on your set-aside funds that you've already earmarked for retirement. And that's our next step. Our next step is the third step of how to prepare for retirement. You need to define your income gap. So we have developed our guaranteed sources of income. We have those available to us. And now we want to find out, do we need to tap into those retirement accounts I just mentioned earlier that might fill the gap to meet our expenses that we defined in our budget? So you can see how this is all coming together. We're analyzing what we have for expenses, what we have for income, and we're actually developing a retirement income plan. Now, I want to go back to one of those defined sources of income because our fourth step is strategize on Social Security. You need to make sure that we're maximizing our Social Security benefits, minimizing taxes. There's a process that you need to go through that. At the Coastal Financial Planning Group, we offer a Social Security analysis tool that'll help you maximize benefits, minimize taxes. Make sure when you request your list for the 10 steps to prepare for retirement that you always ask for what other resources do we have available on a particular topic, and Social Security analysis is one of those. While we're on the topic, you may also request a copy of our new book that we have. And that book, we feature defined income planning. And so that's what our next tip for the 10 steps, our fifth step for preparing for retirement, is formulating a defined outcome income plan for retirement. Now, that's a tough one because we got to take all this information from the other four that we've just discussed, and we need to build them into this written income plan. Now, To take this retirement income plan and put it in writing, we're going to analyze the 4 steps that we've already taken into consideration, and then we're going to put them into this defined outcome income plan. We're going to look at how we're going to generate this income that we need throughout retirement, and then we're going to see what kind of assets we might supplement from our portfolio, from our investment portfolio, to create the income plan. And we want to make sure that that income plan goes all the way out through age 100. So, you might say, I'm not going to live that long, or gosh, my grandfather lived to 98. I might go to 105. No one knows, but we need to be safe. We need to make sure we're not running out of money in retirement, right? Because that's retirees' number one fear, is that we don't plan for enough income to get us out as long as we live. Now, number 6, understand your risk exposure. Not going to go into a lot of detail here, but risk factors of your investments, because there's a lot of risks in retirement, right? But the main risk that we're talking about here is we want to make sure that our reliability of income from those retirement income sources is reliable and not subject to market risk. Because again, we want to make sure that that money doesn't run out in income. So a risk analysis is going to be important there to make sure that we are evaluating the proper risk for especially investments that are going to create income for us in retirement and be one of those defined sources of income for us. Calculating taxes, number 7, important. Make sure that we're minimizing taxes wherever we can. We want to avoid taxes. How do we do that? We need to proactively plan for our taxation in retirement. We need to make sure that we're minimizing taxation, avoiding taxes wherever we can. The only way we can do that is through proactive tax planning. We want to incorporate the help of a legal tax professional, a CPA, an enrolled agent, or perhaps a tax attorney. But we're going to look at how we're going to calculate taxes through the income plan. And let me just give you an example here. If we could show you an idea, like maybe a Roth conversion, that could save us $1,000 a year in our taxes because we don't have to take out a required minimum distribution, and we could spread that out over 20 to 30 years of retirement. How's an extra 20 to 30,000 G's sound to you in retirement? What could you do with that extra money? Let's make sure that we're looking at how to increase our yields on our retirement income through proper tax planning. Number 8, consolidate like qualified accounts. Easiest way to say this is we got a 401k here, we got an IRA here, we got all of these different retirement accounts. We might want to consolidate them. We might be able to reduce fees, but more importantly, we're going to be able to self-direct those investments. And that means we have control. We can pick and choose where we want that money to go and how we want to use it. So let's make sure that we take like titled accounts, like registered accounts, your qualified accounts. Let's maybe look at how we can position those for better control in retirement. Consider inflation. I will say this, if you request a written retirement income plan through our process at the Coastal Financial Planning Group, it's going to include inflation of every one of those expenses that we defined in your budget. We're going to look at the different areas, and we're going to make sure that those particular expenses are factored in for inflation in each area. Inflation, it's the silent tax. It is going to get us. We know taxes are going to rise. We also know that the Fed has said inflation is going to be allowed to rise somewhat. And we've seen that already. You've seen it in the price of a loaf of bread. You've certainly seen it at the lumber yard if you buy a sheet of plywood. So consider inflation. And we are here now at our last of the 10 steps to prepare for retirement. I might have messed up the numbers a little bit, but hey, who's counting? If you want to get the list, you'll see all 10, okay? Review and update your legal documents. The importance of this is that you want to make sure that you make these decisions while you're alive and well, because the alternative is we're alive and not so well. Maybe we lose a little bit of our cognitive reasoning as we get older in retirement. We can't make these kind of important decisions. So let's make sure that we review and update our legal documents, our wills, our trusts. Let's make sure that beneficiaries are designated properly on our IRAs and those qualified accounts we just talked about a moment ago. Let's make sure all this is in order. You'll be prepared for retirement. And when you're prepared, certainly like the Boy Scouts motto, prepare, okay, be prepared. We want to make sure that we're going into retirement prepared also. When you're ready to work through these steps, you might want to work on them your own for a little while by getting our list first, getting the top, the 10 steps to prepare for retirement, request that. Or, you may want to just go through this with us and join us for our complimentary review process. You can find out about that by calling 843-735-5065. Visit our web pages, cfpgroup.biz, and also make sure to remember, request a copy of our book, Modern Retirement Strategies, and also get your copy of this list. Thanks for joining us today for Navigating Retirement. We look forward to working with you soon.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Third-party rankings and recognition from rating services and publications do not guarantee future investment success. Working with a highly rated advisor also does not ensure that a client or prospect will experience a higher level of performance. These ratings should not be viewed as an endorsement of the advisor by any client and do not represent any specific client's evaluation. Generally, ratings, rankings, and recognition are based on information provided by the advisor. Please contact the advisor for more information regarding how these rankings and ratings were formulated.